It is noon in the UK and 1 o'clock in Europe, and this is MyStockScanner Live, where the markets get simpler, your decisions get sharper, and every stock get tested by three questions that really matters as quality, upside, and timing. Hans-Henrik Nielsen and Liam Flavel are ready with information, lots of it. I'm Jesper. I got lots of questions, and some of them are yours, sent to us by FOMO@mystockscanner.com. Let's start with I'm almost going to say something that happened in hindsight. It was at 3 o'clock or 2 o'clock if you're in the UK that Trump spoke, and he said basically nothing. Is that true, Hans-Henrik?
No, he said a lot. It was basically over the theme of Trump's good, Biden's bad, me. That was the core of it. No, there was nothing in it for us as investors. There was a lot of addressing stuff in the US, and there's not much we could use it for. We had feared a little war coming up, but it didn't.
Yeah. It didn't happen. Liam, at least we got some dessert from Micron then, because they really served up a cake, didn't they?
They had fantastic numbers. Stellar, I think, was the way I described it. Yeah, good company marching forward.
They are indeed, and we will be talking about them here on the show because it's Thursday. Liam is here, of course, and we have Tech Thursday. Our show is free, and we pride itself by being it's free. We just give out these advice for absolutely free. We are teaching you to get a strategy, save money, and sleep better at night when it comes to those investments. Make sure you share our show with your friends and family so they can benefit as well. And on the show, as you can see on your screen, if you're watching on YouTube, we start up with inflation numbers and what that means for the markets here and now. Then we look at the Danish market. There's a couple of movers. Lån and Spar Bank is one of them. Roblon and SP Group, which is a company that was brought up by one of our members. And in Thursday Tech, we will dive into Micron after their significant raising of expectation. We'll also take a look at Lululemon, because there's an investor pumping in $1 billion into that company. What will it mean? We will talk about that. And finally, we have stock of the day in Double Mining, which trades on multiple exchanges. And Liam will explain us how it comes that it's sitting in the UK. Is that something about where I'm going to say the British took around the world and forced everybody to play cricket, I guess, at one point in their history?
No, it's the weather. Very simple.
Oh, everybody comes for the weather. That's it.
Yeah, that's the one.
I believe you. I believe you. And we have number of the day. Big one. $140 billion. That's a market swing in under 2 hours. We'll tell you later what it's all about. But let's get to some other numbers in the beginning of the show here, because we get inflation numbers. And the reason why the entire market is really giddy, Hans-Henrik, is, or Liam rather, that's going to be you. It's going to be that we get new numbers because we haven't really had numbers for a long time because of the shutdown of the government in the US.
Yeah, the US. Well, I know today's a big day because you get the EU, the UK, and the Federal Reserve over in the US. We've got core CPI. I believe we have, haven't we, Hans? You're looking puzzled there. So
no, it's because we had a message saying that there is no picture, only sound on the system. But when I look at the website, it seems okay.
Okay.
They probably have to refresh your screen.
Yeah.
Okay. That's sometimes what it can help. But then again, I have a little bit of, can you say, usage of radio. So that could have been why I blanked out the picture that it decided to go back to.
Yeah. No.
Let's get on with the inflation. It was just
what we're talking about in the US. The reason we track this is because it does have an impact on different companies and how they make money, how they pay their debts off, and things like that. So we look at this and we talk about it a lot to our users, and we track it so that other people don't necessarily have to. We can just tell them the information. So that's one of the things that we try and do for our subscribers. We've got some numbers coming out. They haven't been out for a couple of months now, 3 months, I think, was it? The CPI is tracked simply because inflation is a key descriptor on what's happening with the economy, and it affects the interest rates that the Federal Reserve is going to set, and that has a real impact on the companies that we track. Everyone is looking at, is it going to be higher, the inflation coming through? In which case, the Federal Reserve is in a bit of a bind, because if that's higher, they can't really lower the interest rates, because that would just stimulate it more. If it comes in lower, everyone will probably party for a little while until they suddenly realise they're in lower, because the economy is pretty screwed at the moment. So, which one works, which one doesn't for you? It's an interesting one. So that's where we are with it. No one knows.
And the thing is that everybody also dread the word stagflation. And Liam, to people who is not familiar with that word, what does that mean?
It basically means where you get inflation, so the prices of goods are going up, but you also get stagnation in the economy, so that the economy is going down, companies are making less money. So it's sort of the most scary thing you can mention to a central banker, because they basically don't really have a way out of it. They can't increase or decrease interest rates because one will offset the other. The stagflation, a bit the stagnation will offset the inflationary bit, and vice versa.
So we will keep you posted in regards. Hans-Henrik will tell and keep an eye out for the numbers as soon as they come, and we'll go from there. Let's go to the Danish market, because there's a couple of things that moves, even though the people complain that the picture is frozen.
Yeah, there's a blue screen, and we got a couple of comments now saying that there's no picture on there.
Okay, well, the thing is that if I look at, let's take a check, I'll go check on the YouTube channel as well and see where we're at the moment, because when I checked it earlier, there was definitely going. Yeah, I see it as well.
All right, I'm just checking the website right now, and that is a blue screen. No, that is actually Roblon and SP Group I have here on my, so it seems okay. At least here.
Okay. At least here. So apparently it's not a phenomenon that we can control where we're at the moment. There's nothing really we can change. Things look good at Restream, where we are broadcasting from. So you guys hopefully hang with us. Hopefully it'll improve. We have to talk about the Danish market, and it will be fine when you see the show again after we have recorded it.
Yeah.
So that's what we can tell you as it is right now. The Danish movers: Lån and Sparbank, Roblon, and SP Group. SP Group was Karen and Nita Jensen who pointed it out amongst our members on Facebook. And it did very well yesterday, 8% up. But these are the movers in the market yesterday. They're not the biggest companies, Hans-Henrik. Tell us about these companies.
Yes, there are, as you say, they are fairly small, these companies. Let me just find them here. Roblon is, they're making fiber connections. And as we can see, our first question in this is this a quality stock? It's not a quality stock that we would buy. It doesn't mean it can't move up. It doesn't mean it can't have stellar results. We are just not buying it right now. But as you said, there are a couple of others. One of them is what is called Lån and Sparbank in Denmark. And the reason why I picked this is because that was mentioned in an article in Børsen. And that made it go up. And the reason why I say that is a reason it went up is that it normally only has a volume around 200,000-300,000 Danish kroner, meaning $50,000, something like that, per day. And then all of a sudden, it's mentioned in Børsen. That was the biggest volume day. It had picked up volume before that. And then it picked up volume, especially yesterday. But we talked about it the other day, that private investors really need to be careful about reading something in the news and then buying into it, because it can, if it's a small stock, it can really explode in price and you get in at the worst possible price. So be careful about that. One of the other small ones is SP Group. And as you said, Jesper, we had 2 or 3 of our members that actually wrote yesterday and said, isn't this just ready to pop? And then it popped. The thing is that that is really good quality. So it really warmed my teacher heart that we have been able to teach people how to use the system well enough to find these stocks without us having to tell them about them. That is the point of it all. And it has a quality score of 96, rising earnings per share, revenue going slightly up. And in the valuation, as our members pointed out, it is in what we call the cheap zone with some very good upside potential. And don't worry, analysts don't think it will go down 100%. We just don't have the data in the system for this small stock right now. So this was a really good thing yesterday, and I'm glad that we had some members that spotted it.
Quick question to you in regards to SP Group, because of course, if you're watching right now, you kind of go, I can see a lot of potential still in this one. But again, it's one of those stocks that are movable by a few buyers. We agree upon that.
That is true. It has a volume of it's 3, 4, 5 million per day. So it's actually 10 times as large as Lånens Sparbank. But still, if 10 people watches this show and jumps into it right at once, it will move the price. So use a limit order. So you're saying, I'm not going to pay more than this. So if it jumps, you're not getting completely ripped off.
Okay, so far the Danish movers, a stock that we can't move even if we wanted to, or else we would have to get a raise, I think, and that's Micron. It's Tuesday Tech. Liam is with us. We are delighted. And Micron, of course, almost a headline in the Tuesday Tech. I know that you want to talk Oracle, but was this the Christmas gift that all the market was waiting for, that finally a tech stock, an AI stock went up?
Yeah, well, yes, and it was because of AI that it went up. We'll just have a quick look at it. I'll share my screen here. We've been talking about this for a couple of weeks now, so people who've been watching us or reading our articles probably aren't hugely surprised by this happening. Micron are one of the big 3 memory companies in the world. AI uses a shed load of memory to run its operations, and it's a specific, if I can say that word, a specific type of memory called high bandwidth memory, which is required. So they've been quite loudly shutting down consumer memory fabrication plants and retooling them to make this high bandwidth memory. The analysts are all looking out, and the companies are all coming out and saying there is not going to be enough memory to go around for the next 1 to 2 years. We simply cannot make enough of it. And Micron said that last night. They repeated it. Their guidance was up 30% from what analysts are expecting for the next quarter, and their earnings were fantastic, and the revenues were great this quarter as well. So they're a company that are really going places, and so looking at the company, just very quickly on a 3-point playbook basis, everything is green here. The earnings is going up through the roof. The quality is high at 89. The PEG ratio is low there, so it says that there's lots of upside potential in the stock. So those 3 factors alone tell me, yeah, this is something I really want to look into. When we go down to the value chart, I'll just switch across to the main value chart here. If I just adjust it to where I'd normally put these things, you can see the analysts only think it's going to grow 13.5% by the end of 2027. I think they're completely wrong in this. I don't actually know where they're getting these figures from. Basically, the market would have to collapse in that time to do that. It could happen if the AI bubble bursts, but if that's the case, Nvidia and companies like that would be massively undervalued by the analysts at the same time. So we can only see sort of huge potential growth coming in from Micron, and it's also potentially in our buy zone as well. So that's something we need to talk about, because it's actually opening up here about 12% up today. So they just had a stellar result, and I can't see too much knocking them off their perch in that way, because the earnings are going to grow so much.
Okay, let's drop something into the beer then. A big thing called Oracle, because that takes away the joy.
It does, and you wouldn't want to drink it after Oracle have been in your beer right now, I must admit. Oracle are having the problem where they were priced to perfection. So we bought them on the 28th of April this year. We made 60% before we exited on the 29th of August. And we exited because, very simply, it broke our trading rules. So we exited around here, something like that, when it dropped below the 50-day moving average. A few days later, they announced their deal with OpenAI, and the stock went up 30%. And everyone said, damn, we missed the opportunity there. That was just one of those things that happened. We couldn't foresee it. The stock is now 22% below where we sold it. And the issue here is debt. The companies are, the company, yesterday it got announced that Al Capital, who have been Oracle's partner in funding these data centers that it's promising, pulled out of the deal to fund the latest data center. That was a $10 billion deal, and they're supposed to be putting $3 billion into it. And they were basically saying, we need higher interest rates from you, Oracle, to actually for us to put the money up in front of it, because we don't trust that you're going to survive in the condition to pay us all of the debt we're going to lend you. That was as simple as that. Blue Owl moving out, and Oracle have still got their funding from another company, but everyone is very, very nervous of this. And what's called their CDSs, which is basically insurance on Oracle forfeiting their debt obligations in the future, are about 4 or 5 times higher than they have been since 2009.
Super quick question, Liam, because of course we have so much on the program and the show that we want to tell about. But when you say that somebody tells you, when your bank or the people lending you money say, we're not sure you're going to survive, that gives me the creeps. It's basically running down my back with sweat right now.
The Oracle have taken on $106 billion of loans over the next 5 years to fund the data center and the chips that go out there. And effectively, what's going to happen, because the chips only really last about 5 to 6 years, they're going to have to redo that in over the next 5 to 6 years as well. So this is a constant thing, and they're saying, we don't know whether Oracle could afford it, and the shareholders are saying, we don't actually know that this is the direction we want to be in, because we can't see where the payback is for it. So that's what's going wrong at the moment.
Listen, another question, because you have your article up on our platform so you can read all about it, but it's a little bit about what China is doing at the moment. It seems like they're sort of doing it on their own. They don't need ASML. They don't need NVIDIA. What's going on?
Yeah, very quickly. ASML is the company from the Netherlands that makes the machinery that makes all the advanced chips in the world. So they can't sell them to China. So China have said, okay, we'll just employ a load of retired ASML engineers and scientists, put them in a room. They weren't even allowed to call themselves their own names to each other. They all had fake name badges and things like that. And they've basically rebuilt an ASML machine, an EUV it's called machine. It's not going to be production capable for 3 to 5 years. So we're not looking at the death of NVIDIA or Taiwan Semiconductors or anything like that now, but it's showing that China refused to take on the latest NVIDIA chips that the US have allowed NVIDIA to sell into there, because they want to grow their own industry and they want to be self-reliant. So that's where that story is going.
And read about it in Thursday Tech. It's available on our platform. Liam writes it every Thursday, and he keeps his eye, and he will keep an eye on the pulse for the tech as well. We're going to get ourselves in shape here, because we are sitting down way too much. So there's a stock we need to look at. It's a stock that we talked about in regards to Comeback Kings, the Tuesday poll, where we asked people what stock is going to come back from being beaten down in 2025, is going to make a comeback in 2026. And one of those stocks that our members picked out was Lululemon. And Hans-Henrik, I guess you're not wearing yoga pants. I hope you're not wearing yoga pants. I'm sorry.
It's not just wearing pants.
We're hoping for pants, not yoga pants. But Hans-Henrik, what's up with Lululemon in that sense that I read an article that they got $1 billion?
Yeah. They had an activist investor, as it's called. That is the opposite of a passive investor. So it's an investor that comes in and buys enough stock so they can put some of their own people on the board and actually choose a direction for the company. Where should we save money, and so on and so forth. So, and that can be positive, it can be negative. However, if we look at it, it was kicked out of the NASDAQ 100 the other day, but that has something to do with size and everything. It's actually a good quality stock. We looked at it and said, if we were to pick one of those that were kicked out of NASDAQ 100, this could be one of them. Good quality score. They have had a declining earnings per share, which is our main concern here. Revenue is fairly okay. Analysts actually like it a lot. Looking at the valuation, that is where we come in here, where it looks a bit pale here. We talked about it down here somewhere and said there could be some upside. But what an activist investor can do, because you might wonder, why would an activist investor put $1 billion into something that has a bad reward to risk? But what an activist investor can do is, we can see they are projected to have a negative earnings per share growth next year. But what if that could be turned around to a positive here, and maybe a positive, even more positive here? If they could up the the growth rates, they could also get investors to pay maybe a higher price earning, because we do like to pay a higher price earnings when it's a growth stock. And just messing a bit around on the positive way with these numbers here, you can see all of a sudden in just a few years you have a 74% upside here. Not necessarily that is happening, but it's just to say $1 billion put in here. And these investors are probably thinking a bit further ahead than just 2 years, but that can be a really, really good investment if you take a bit of a stalling company and just boost the earnings per share and price earning. Then you have a really good case.
And it could be that they can talk Liam into wearing the pants and then do an ad with it, and then we can see where it's going. Well, we saw what happened with Sydney Sweeney and that jeans company. It took off.
It's the same with me and Lederhosen in Germany. Yeah.
Yeah, that's another picture that calls for a beer, a big one, I would have to say. But anyway, let's jump and see if we can find some money somewhere else. We have a stock of the day, and it's because we are constantly looking at the mining industry with the prices of gold, silver, and copper, and what have you. Platinum is going up as well. This stock, when you look it up in our not our portfolio, but on our platform, Liam, a lot of different versions come up on the screen. Where does it belong, and which one should you buy if you are located in Europe, in UK, or in Denmark?
It's an interesting one. When you search for Endeavour Mining, you can see quite a few Endeavours around. So you can see one in Toronto as well, and the Endeavour Group. I'm not actually sure whether they're part of it or not. Effectively, you should buy it in the currency that's probably more local to you, as long as there's enough enough shares transacted and volume on the exchange. So the UK is where I believe its main listing is. And we find a lot of that. I think at one stage there was a very high percentage of the FTSE 100 was foreign mining companies, because it was easy for them to acquire the capital that they needed on the London Stock Exchange. We've been bleeding some of those companies out recently because the US is just so full of money and full of lots of things over in the exchanges over there. Is it a quality company? Yes, it is. I mean, we've got very quickly our 3-point playbook. Everything is green on here, and there's this dashboard here is there to show us whether something is good or not at the glance of an eye. As I say, I tend to look at the quality score, 76, great, we want it over 60. Earnings per share is going upwards. We haven't got a PEG ratio here because the earnings per share this year were negative, so we can't see anything there. But the revenues are growing strongly. The analysts in the last 3 months have put the company up by 10%. Free cash flow is growing, and so on and so forth. So we're good on that respect. From a valuation point of view, actually, we can see here something that a lot of people who watch us regularly can see, something that we like a lot, which is where one of the lines we put, and this is something I put in quite a while ago, one of the lines, the stock is actually tracking that. So that gives us quite a lot of confidence that for the last couple of months, that stock has been going there. So if it carries on that way, our worst case scenario is this could be up 75%. The analysts think in a year's time it could be up 13%, according to them. But just looking at the potential of the company, 7.8 might be the worst case scenario might be a little bit rosy. Even if we put it down a bit, it's still a decent sort of worst case scenario for us.
If I may add, Liam, just a quick thing. When we choose the price earnings for stock, that gives us how much we plan to or we demand of in yield. So if you take a price earning of 10, that gives you a yield of 10%. This Endeavour Mining, they have their mines in Burkina Faso, in Senegal, in Ivory Coast, and so on. It's not that they are the most unstable countries at the continent, but it is in Western Africa. And that means there is a risk. It could be nationalizing mines that have been seen in several African countries and so on. It's just to say that when you invest in something like that, you want a bit higher upside compared to if you buy mine in Canada or Brazil or something like that.
Just to offset your risk and understand that.
Exactly.
Totally. The reason I've set it higher is basically because historically the stock has always traded at higher multiples, and it's doing that now. So it's tracing along this route. So I don't actually see the argument that there is an argument to say yes, it's going to be down to 7, because that, when you look here, is the average over the last. It's actually lower than that. 5 is the average over the last 5 years, but it's tracking that at the moment. From a would we actually go into it now point of view, it's above the 50-day. The MTIs are both green. It's above the 200-day. It's in a momentum curve that's just going upwards. Looks like a good stock.
And to top that, we will have an extra stock of the day later as well on our platform. Hans-Henrik is warming up to one.
Yep.
And let's hope for one that doesn't have the swing that I was talking about earlier in the show when I talked about number of the day, because that swing almost got you seasick in that sense that yesterday Bitcoin surged more than $3,000 in under an hour. And it came above the $90,000 per Bitcoin really quickly. But it only stayed there for a couple of minutes, and then it went down again to 86,000. Gentlemen, that's 140 billion swing in market cap in under 2 hours. Hang on to your lederhosen. I say that, Liam. That is crazy.
But then everyone knows we think Bitcoin, and those, because they're not backed by anything, they can be a bit crazy.
Yeah, and it, again, I know Hans-Henrik, you both of you at one point where we talked about a couple of weeks ago said, well, you were guessing that next year we could see, I don't even dare to say, but you said something like 28,000 or something like that.
But
Bitcoin.
I did say 46
okay.
or 48, but actually looking at the drops it has had earlier, or 85%, if that is going to happen again, we're going to see Bitcoin in 18,000.
Yikes! And of course, this is not advice on selling your Bitcoin or buying Bitcoins or hoping for something or whatever. It's just our opinion. When we are back tomorrow, we're gonna have the face-off. It's gonna be in Danish. It's gonna be at 12 o'clock, and the face-off will be one from our users have decided, in that sense, that he suggested we take a look at one of those lists that's really popular around New Year, the stocks, the top 50 stocks, things to come and what have you. It's basically window dressing for a lot of banks and investing companies. That's what they do. Of course, we'll also come with our suggestions. Why shouldn't we? But that'll be a face-off tomorrow. But Liam, before we let you go, and you'll be back on Tuesday at 1 o'clock, I'm gonna arrest you on Accenture that comes out with numbers later today. You said on Tuesday that's the number you're really looking forward to. What are you looking forward to?
I'm looking into it because what they have positioned themselves are specialists in actually implementing AI policies and AI techniques into other companies, into their client companies. That's what they're good at. That's what they're building a good business at. So seeing that will give us a good eye for whether AI is actually making a headway in corporate America, corporate Europe, or whether it's actually falling a bit dud at the moment.
And I'm absolutely certain that you, of course, will keep an eye out for it. And if there's any revelations or any big news in it, we, of course, will give you an article that you can find on our platform from Liam way before next Thursday, when there's another Thursday Tech, just in time for Christmas. Liam, you're not going to be ready for Boxing Day if you're not. Yeah,
we do it properly in this country. Christmas Eve and then Christmas Day. That's how you do things.
Yeah, but that's why I say that you need to work on the 25th. You didn't realize it until now. I can see that in your eyes. But listen, guys, we ran over a little bit because of technical problems in regards to our show earlier. It was not something that we could do anything about. I think it was YouTube that gave us a little elf suggestion there. But remember, Liam is back on Tuesday, 1 o'clock Central European time. Hans-Henrik and I are back tomorrow at noon. That's it for Thursday's MyStockScanner live. Remember, write us if you have any questions, FOMO@mystockscanner.com. We are over midweek. It's the perfect time to stay disciplined and stick to your playbook that tells quality, upside, and timing. Guys, see you guys around. Take care. Happy investing.